The people that are buying now, gold and silver now, are looking to hold it for anywhere from 2 months to 3 years. The people that are selling gold now are really not selling gold. They're buying yen. They need to buy yen, and that means they need to liquidate everything else.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and today's market rundown, we're going to look at what happens. We're going to look at a report by MUFG that goes into what happens in a red wave election scenario. So a red wave would be if Trump won and they swept Congress, Senate, what have you. And we're also going to look at who is buying right now, gold and silver, versus who is selling gold and silver right now. And I'll give you an idea of a short-term, long-term perspective on the markets, because this has been a rough week if you're a precious metals person. However, well, we need to put that in the past, but in order to do that, we need to prepare for the future. So that's what we're going to do today. Let's pull up the markets and take a look. There's the gold daily. The dollar is 104.39 and unchanged. 10-year yields are unchanged as well. The S&P 500 is 54.44, up 40. The VIX is 1750, down 97. Gold is 23.73, up 8 and change. Silver is 27.77, down 8. Copper is 4.14, up 2 cents. WTI is down 40 at 79. Natural gas is 202, down a penny. Bitcoin and Ethereum are up. Bitcoin is 67,000, up 1,400. It was slammed the last day or two and is starting to ramp again. It may just be the Bitcoin gathering, get together, whatever it is. Bitcoin, it's the trade show. Everyone's getting together talking about Bitcoin, and so that's going to make the price go up. Does it mean it's not real? It means that this is a powerful force of people for this asset. Anyway, Ethereum 3241. By contrast, Ethereum just had an ETF launched, and with all the hoopla, it's actually underperforming Bitcoin for the last week or so. So that should tell you something about Bitcoin. Palladium is down 4 at 905 and change, and platinum is down $1 at 932. The gold silver ratio is hovering at 85. Let me pull that up for a second. There you go. There's that damn line. All right. Pay attention. That's what it's telling me anyway. Soybeans are down 5 at 11.15. Corn is 3.99, down 2, and wheat is up, bucking the trend, up 2.4. All right. So I bring this up because, well, that's the sign, right? That well, it's just a sign to pay attention that the short to intermediate term, and that means the week to the next 3 months, might see silver continue to go sideways relative to gold in relationship, meaning I think it's getting back up into a range here. How it reacts here is what matters. Technical traders will pay attention to this more than me, unless I'm trading. All right, let's get to the news. Red wave, gold, and safety. All right, we're going to explore when will it be safe to buy gold and silver as a speculator, not as a owner or stacker, and when and what are the implications of a red wave come election time. The front page today, just gathering my thoughts. Okay, yesterday, 2 days ago, there was a violent shift in the yield curve. And so we put together something for that. It wasn't gold related. We put together something for that for founders. We're going to be unlocking that for premium today. because it's not about gold at all, but it does give you an idea of where things are going. And much of it is focused on equities, and everybody who owns gold probably owns some equities, ourselves included. So this will probably be a very helpful explainer and uh, way to get things kind of in perspective as we go forward from here. Everything is about getting ducks in order to go forward from here. That's what I'm looking at it as. Trading gold's next 6 months, you know that. And here's another founders thing. The HeartNet Flow Show is out, and we have it, and we're going to discuss it in premium today for the gold information that's there. So let's get to it. Yesterday, there were two pieces that came out that were completely contradictory of the price action in gold and silver. The first one was Citibank said city managers are less constructive on energy and base commodities, but much more positive on precious metals. That's what Citi said. I threw the Bank of America chart in the middle there. Let's continue to read what Citi said. In line with gold, managers have increased bullish bets on US dollar and Japanese yen while decreasing euro and British pound. So this didn't make sense. Okay, so Citibank is telling you that institutional fund managers are buying gold even as it's coming off. And in that chart there, Bank of America's HeartNet is showing you that you had the biggest 2-week inflow to gold since March of 22. So why is gold lower? Gold is lower, and silver as well. Why are gold and silver lower? Because carry trade money, this is people that have been shorting the yen or yen bonds and taking the money to buy other things, they're unwinding violently. And so they're pushing the market in an exacerbated way. So anybody, if you want to look at it in a time frame, the people that are buying now, gold and silver now, are looking to hold it for anywhere from 2 months to 3 years. The people that are selling gold now are really not selling gold. They're buying yen. They need to buy yen, and that means they need to liquidate everything else. It's kind of like selling the grand piano to make your margin call, and that's exactly what's happening now. It's significant. The markets have sold off a lot, but it should be short-lived, and we're going to tell you exactly how short-lived it should be as we continue this in premium. But for now, just know this: yes, it can go lower. Yes, it will probably go lower. But the buyers have deeper pockets than the sellers. That's the comment. They're not stackers, but they're longer-term buyers with their eye on the election. Okay, so which brings us to the next part. MUFG says the implications for commodities under a red wave are bullish for gold. All right, so global commodities, the red wave will spur a return to higher rates with gold, the standout best-in-class conviction across the entire commodities complex. Structural gold drivers such as fiscal deficit complacency risks, tariffs, trade retaliations, central bank reserve diversification amid de-dollarization, inflation hedging, and bullion's role as a geopolitical hedge of first resort, no longer of last resort, in a world given a return to America first rhetoric, are likely to be magnified under a red wave. That's right. Look, if there's a red wave, remember, it doesn't just mean Trump winning. The GOP has to secure everything. If the GOP secures everything, you're not going to have a cutback in spending. You're going to spend on different things. You're going to use tariffs, which is going to be stagflationary, okay, at least in the short term, right? You're going to have trade retaliations, which is going to restrict commodity flows from country to country. You're going to see the price of gold in Shanghai go up more relative to the U.S. You're going to see central bank reserve diversification amid de-dollarization increase, not decrease. You're going to see more inflation hedging, and you're going to see bullion's role as a geopolitical hedge of first resort in a world given return to America first. Look, nationalism is going to increase the demand for gold. Okay, the world's going to continue dividing. This report's actually, this is their weekly recap, and they have a feature product every week. Not product, feature focus or article. This week, it's the red wave. They talk about all the commodities in it, but they notice that precious metals will benefit more. So, for example, Red wave, what happens to energy? It goes down. It goes down because the Republicans are pro drilling, right? Think about it. Under Biden, the government was anti drilling. The government was, excuse me, the government was green energy. And what happened to oil? Oh, it went up. Now we're going to drill for it more. And that's how it manifests. Other commodities, it's a mixed bag, but softer energy, higher precious metals. That's the way it works. Stay with us for that. We have more on that at the bottom, as well as a way to say, well, when will it be over? When will it be safe? When will it be safe from a tactical point of view? I don't know how soon it will be, but I do have a level, a personal proprietary level that's not technical, but will probably tie in well if you're a technical trader at the bottom. Okay, so moving on. The news today, we're skipping over the news stories, but they're in there. Here, I'll put them back up there for a second. The news today is Barack Obama and Michelle Obama announced their support for Kamala Harris's candidacy, which you knew would happen. And it was just a timing of, I guess they wanted to see if she could hack it, Plus, this is politics, right? So I'm sure they got something out of it. What, I don't know. But that's how the game's played. Data on deck today's PCE probably will be out by the time you see this. There hasn't been a lot of focus on data in the markets lately because I think the markets are saying, and they could be wrong, the markets are saying Powell's going to cut. Inflation's going to continue lower. The economy is going to give inconsistent vibes on the data, but it will start to trend lower. And therefore, they think the Fed's going to cut, which, by the way, is a big asymmetry to the Fed not cutting. And you could see this could be one of the reasons that that everything's dropping, stocks included. Anyway, so stay with us, and we're going to talk about those things alluded to earlier. So gold is up $9. Let's pull that up. All right, so I'll give you my levels, right? We broke this trend line. We're at it. Oh boy, we're at I don't have it on here right now, but the 50-day moving average is right below, and it's curving lower. So this could be another 2 days like that, and then another sell-off. This is a bear flag, right? After the fact, it's a bear flag. And I think the first level that we should stop at is right here. We're stopping at the first level, and the next level is down there. Don't be surprised if we go there. The thing is, do you buy it if it goes there or not? And I say yes, and I have a trigger for doing that as well, and it's open interest based. Okay, stay here, and we'll do a little bit more. Have a great weekend, everyone.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week, where this week's special includes constitutional silver half dollars for only $2.50 over spot, one of the more popular silver items available. And on the gold side, we have 10th ounce American Gold Eagles for only $39 over mil. And to place an order or get your questions answered, call 833-326-4653 or email us at arcadia@milesfranklin.com. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.